Hello everyone, here are the latest market news on June the 14th, 2019. Asian stocks mixed amid concerns of global growth. Stocks in Asia were mixed on Friday, along with the global bond rise continued amid ongoing fears that trade disputes may put at risk global economic growth. Shares in Hong Kong and Korea declined 0.7% and 0.4% respectively. Japanese index Topix rose 0.3%. U.S. stocks climbed Thursday to a 5-week high. A surprise increase in U.S. jobless claims supported bets that the Federal Reserve may cut rates. 10-year Treasuries yields fallen to 2.07% on Friday. Oil remained strong following escalation in Middle East tensions, while West Texas Intermediate crude was flat at $52.27 a barrel. WeWork prepares deal to buy India's affiliate. The New York-based company WeWork Cos is in talks to buy around 70% of WeWork India at a valuation of about $2.75 billion, said person familiar with the matter. WeWork India is a brand franchisee controlled by Buildcon LLP, which is owned by real estate billionaire Jitu Virvani and his son Karan Virvani. The deal, $1.9 billion at those terms, would be part cash and part stock, and could close as early as August. The contract would allow the shared office startup to consolidate financial results from the fast-growing unit as it prepares for an initial public offering this year. It's aiming to avoid the kind of rocky start Uber Technologies Inc. endured after it went public in May. UK businesses called to prepare for no-deal Brexit. Britain's businesses are being urged to step up their preparations for a no-deal Brexit amid signs that Theresa May's successor could be prepared to leave the EU without a deal at the end of October. The Institute of Directors produced figures that showed less than half of businesses had Brexit plans and said firms should be considering all reasonable preparations for no deal. Morgan said that getting a deal would be a little better outcome, but it would prolong the uncertainty if Britain had to trade with the EU on the same World Trade Organization terms as countries such as China and the US. European shares fall on Broadcom's warning. Technology shares led European stocks lower on Friday after U.S. chipmaker Broadcom warned of a broad slowdown in demand due to trade tensions and the U.S. ban on Chinese tech and mobile phone company Huawei Technologies. The forecast of a $2 billion hit to sales at one of the biggest U.S. tech companies came as Chinese industrial output growth slowed to a more than 17-year of 5% in May and were among the signs that President Trump's trade war already affected on global growth. Shares in ASML, STMicro, Siltronic, ASM International, and AMS tumbled by 2.1% to 4.5% as the warning reignited fears chipmakers would not keep to their promises of a second-half recovery. The pan-European Stocks 600 index fell 0.38%, with Germany's trade-sensitive DAX falling 0.40%.